Hello everybody, welcome to my channel and welcome to the one of videos that is full of important knowledge or full of comprehensive knowledge about the market. This video, in this video we will discuss 3 or 4 points, and this video is about the price action behavior in a market. Important for the persons who are beginning in the market, how it is very important to be to see price action is being elaborated in this video. I will, as you know that as a beginner, whenever we start in a market, we are very much, as this market is very volatile. Each every step you will find a lot of buyers and sellers, so it is very difficult to find out the position, to take the positions. So what happens, the beginner who comes in the market take random trades. He or she takes random trades, like whenever the market is just showing some red candles, he or she starts selling, and when the market is showing any green candle, he or she starts buying. So this happens until until that newcomer does not get exhausted completely. He or she takes a great loss and leaves the market in a hurry. So for a newcomer, it is very important to observe the market's normal course. It is very valuable thing. It takes a lot of time to take a great knowledge about the market, and for sustaining in a market you have to watch the market carefully. So through this video I'm here putting some light over the price action behavior in a market, how market behaves, how market's price behaves in the market in its run. Whenever market is making any making any whenever market is in some kind of course, what is generally does. So whenever we are new in the market, we should get a clear picture about the direction of the market. When the market is bullish, it means market is going up, we should not go against. When the market is coming down, in this case also we should not go against. It means what? If the market is in upper phase, is going upwards, is going upwards, in this case we should avoid to sell in the market. We should not sell in the market. Or when the market is coming down, when the market is coming downwards, we should avoid taking buying position. So this is the normal course in the market. As you may say that this looks very easy, but this is not very easy. You have to take it into your mind, you have to digest it well, and you have to go through a lot of examples in the market, and take whenever you are going to make any position in the market, you have to observe these things completely with a lot of patience. Then you will start getting profit in the market. So here I'm with the topic that what is price action behavior, general behavior in the market. On YouTube you will find a lot of videos explaining about price behavior and price action strategy, but here I am telling you about some specific points to be seen in price action. Normally people observe that market which make higher highs. This is the high point, right? This is the high point. I should mark it like this is the high, and this is another high, this is another high. So you can see the market is making new high every day. It has made 4 highs. It means when the market is making higher highs, it means market is in bullish run. But is it enough? No, is it not enough? Here I'm mentioning 2 specific points which will give you a probable direction, which will elaborate a probable direction of the market, and we will get sure about the market's movement, that what is the overall market's direction, what shall be the market direction overall. So these 2 points are for me, which are very important whenever I'm observing the direction of the market. The 2 points for me are very important. These 2 points are, I should mark it over this illustration. These 2 points are, this is previous day high, right? This is previous day high, and I indicate another point also. This is what? Previous day close. These are the 2 points which are very important for me. For making any general decision about the market direction, I will observe these 2 points in price section. If market is trading above previous day close, it is high chance to mark for the market to cross the previous day high. So in such condition, market breaks the previous day high after being opened at previous day close or above the previous day close. Suppose this is the first day, this is the first day, and market is opening somewhere around previous day close. And in such case, market is opening above the previous day close, it will reclaim its previous day high and may break the previous day high, right? And make a new high, right? And then closes above the previous day high, closes above the previous day. This was the previous day high and market is opening above the previous day high. Sorry, this is the previous day. I should copy it to here. So this is what, this is the previous day close. So market here on the first day opened and made a new high and then closed below. What happens in the next day? Market is opening above the previous day close and just broke the previous day high. This was the previous day and made a new high and then closes back above the previous day high. This is happening here. What happens next? It means what? The market is respecting the previous day close and is breaking the previous day high. It is making the price upwards. It is taking the market in the upward movement. What happens next? What happens next? Market again makes a new high, and here, suppose this is the previous day close. Again, if you have to trade for this day, this is the third day, market is opening above the previous day high. What happens? Market breaks the previous day high and let me copy this. Yes, so what happens? This is the third day, market is opening above the previous day close. If the market is opening above the previous day close, it may break this previous day high and breaks this previous day high and makes a new high. This is the new high. Market makes a new high, right? Until market is not breaking its previous day close and breaking the previous day highs, it means market is in a upward movement. That is a bull run in a market, right? Then finally market makes a new high and closes below that previous closes that new high. This is the new high. Let me make it red so that you can So this is what happens here. In through that red arrow, I would like to make you understand that up to this point, market is breaking its previous day highs and respecting its previous day closes. It means market in which run? Market is in bull run. Market is going up. But what happens next when the market is closing below the previous day high and opens? Suppose this is the next day. Market is opening somewhere around this point here. Market is opening somewhere around. So market open above the previous day close like the earlier days, but does not break the previous day high. This is what previous day high. This is the previous day high point. Market is opening above the previous day close but is not breaking this previous day high. It means what? The market has started doing some contradiction. At, up to this point, what was happening? Market was respecting its previous day closes and breaking its previous day highs. But what happens here when I made this arrow here? I will make some live examples in the chart also. So here you can see first here you can see the market is opening somewhere around here over the previous day high, over the previous day close, but is not crossing this previous day high. So now the scene has been changed. Up to now the market was taking support over the previous day closes and breaking the previous day highs. But here you can see the market is taking support over the previous day close, but is not going towards the previous day high. It means what the market is in the negative sentiment, has started to reverse. Here you can see the market is opening above the previous day close, is not going above the previous day high, right? So again, this was the previous day high. I make it red. Okay, this was the previous day high. Market opening above the previous day close, but made a high point that did not break the previous day high point. It means market just broke the previous day close, but did not break the previous day high. So it is called reversal. It is called the negative sentiment. It is called the market has started to reverse from this point. What happens next? Market again closes below the previous day close. Now the market will start breaking the market will start breaking the previous day closes, but will not reclaim its previous day high. Will not reclaim its previous day high. Again, the market is here also opening above the previous day close, but is not breaking the previous day high. This is the previous. Suppose this is the previous day high. Market opens here above the close, but does not go to that previous day high. It means what? The market here is in negative sentiment. So this is the point here for a price action. You have to observe these 2 points, the previous day high and the previous day close. Simple. The rule is simple for deciding about the direction, that if the market is above the previous day close and is breaking the previous day high, it means market is in a bullish run. Again, you can see the market is opening above the previous day close and breaking the previous day high. It means market is in a upward movement. But finally a day comes, as you know, here only buyers have come here. So market always runs in zigzag way. It does not go right through straight lines. It does not go in straight lines. It's quite natural in a market. So whenever the market is making new highs and taking support at the previous day closes, it means it has invited lot of buyers in the market. The general sentiment of the market has become bullish. It means what? All the traders who are coming in the market are taking just long positions. They are just taking buying positions. Also, it's in such conditions when the buyers have clustered, market started to reverse and target all those buyers who have taken their position in the market. Like this was the point where the market had entered. This is the point. This is the one point. This is the another point. This is one more point where the market has invited new buyers. And when the new buyers have come in the market will start reversing from that. And what is the verification, or what is the indication that market has started reversing? That the market will open above the previous day close, but will not breach the previous day high, will not break the previous day high. It may get support of previous day close, but will not break the previous day high. So in other words, it will cross previous day close. Like this was the previous day close, market was opening somewhere around here, market does not go for the high and just came down. Here it came down and closes below the previous day close. This was the previous day close, market is closing below that. It is not closing above that. rather it is closing below that. Again the market is opening here, making making it open above the previous day close. This is the previous day close, but does not go to break this previous day high. This was the previous day high. Market is not going to break this previous day high. So this happens. These are the two legs in the market generally occurs. One is bull leg, where market invites buyer and take the market in upward movement. When the lot of buyers have clustered, the market starts reversing from that point, and 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 targets all those buyers who have taken position in the market here. And it the sec so in this condition the second leg starts. So this leg, when the market is in upward movement, this is called impulsion leg. Or when the market starts reversing and market falls, this leg is called correction or reversal leg. So let's come here with examples, live examples of the chart. You will get a clear picture in the chart also. Let me come here. Yes, these look. This is the example, the illustration which I have made earlier, and for that illustration, this is the great example here. You can find it out anywhere. After watching this video, you just search out in the market what happens, what is really what I have told you in the about the market, about including the previous day high and previous day closes. Is it really working or not? So for that you have to work over the charts. So before making a live chart illustration, I just activate some point session break. Session break means session breaks, you get vertical dotted lines, and each vertical dotted lines, between two vertical dotted lines there is a single day session. This is the single day session. What is happening single day session? So you can see there, here you can see there are two legs. This is one leg and this is second leg. What is happening in these legs? I'm telling you here. What is happening in these legs? The market started reversing from this. What is happening? This is the previous day close. Market is opening above the previous day close, but is not breaking this previous day high. What happens? Comes back, comes down. Again, market is opening above the previous day close, but is not breaking its previous day high. It did not sustain breaking this previous day high. What happens next? For the whole day it came down. So you can get the simple, the direction has been cleared by these 2 points. If the market is above the previous day close and is not reclaiming its previous day high, it means what? The market has is in negative sentiment. In such condition we should not go to buy, rather we should see the opportunity to sell. Again, on the third day what happens? Market is opening above the previous day close but is not closing the previous day high. This was the previous day high. This was the previous day high. Market is not uh, even going near the previous day high. What happens? Market comes down. Again, market is opening at previous day high, does not go to cross the previous day high. What happens? Single-handedly comes in negative direction. Again, here in on this day, what happens? This is happening something another sort of thing here. You can see the market is opening below the previous day close, and but did not go to the previous day high. So here also you can go to the negative sentiment. Again, the market is opening at the previous day close but straightly come down. Again, the market is coming is opening above the previous day close but is not crossing the previous day high. Again came down. Now from this point market is opening below the previous day close and straightly bend down. And what happens in the next move? It started reversing. Here you can see this was the last close in this leg, and this was the last close that was broken, but the market reversed over that previous day close. It means what? The market that broke the previous day close has come above that previous day close. This was the previous day close, right? Here you can see what is happening here. The market has come up to this point. My market was continuously coming down. Up to this point, what was happening? Market was continuously coming down. It hasn't reclaimed its previous day high. Rather, it was opening below the previous day close or above the previous day close, but more not breaking the previous day highs. It means what? The market was in negative sentiment. What? So here you have seen that sellers have come. Sellers have taken the position in the market. Sellers are here. Sellers are here. You can find sellers, lot of sellers here. So there are a lot of sellers in the market right now up to this condition. What happens then? I have told you the market does not run in a usual course. It has fluctuations. It has zigzag path. So what happens here? This was the previous day close. Opens below the previous day close, but in the end of the day, what happens? Market traded above the previous day close. This is alarming situation. You should be careful in taking short position in such position right now. Why? Because up to now market was taking support of the previous day close, but not going to touch the previous day highs. Up to now, each day you can see the market was opening, whether opening over above the previous day close or below the previous day close, it was not claiming its previous day highs. But what is happening in this market of 13th May, that market is opening up below the previous day close and went short straightly. And what happens in the later move of the market? Market reclaimed its position and broke the present day high. This was the present day high. It was broken and the market started trading above the previous day close. So this is alarming situation. From this, what happens here? What happens? Market opens above the previous day close, and here you can see market has started taking new high. So this was the reversing point. This is called reversing point. Here what is happening? Market has started crossing previous day close, as well as it has started to reclaim the previous day high. Here through this chart, let me delete this. You can see it more visible. So friends, this in such market, when you have seen continuous fall, if this thing happen, until the market is not reclaiming its previous day highs, you should accompany the market for fall. But when the market start to taking support of the previous day close and start to reclaim its previous day highs, in such condition we should change the direction. Up to now we were in selling position, we were in negative in sentiment, but from this day we will start our positive run now. See, this is the previous day close, this is the close of this day, it is above the previous day close, right? What happens? The market take a short bull run here. Okay, then what happens? Market again here opening above the previous day close, straightly came down. Again here market is opening above the previous day close and straightly came down. What is happening here? Market is making traders in confusion. It is confusing the traders whether it is reversing or still in the short run. So up to this point market is in decision making, market is making confusion here. But from this point, from this day, market, see, this was the last previous day close, this was the last point. From there market started to taking support of previous day closes and started to reclaim the previous day highs. This was the first point. From this the market taking retesting, this is called retesting. Market bent upwards but came sharply back to the point. From the point where it started reversing. And then what happens next? Here market is opening below the previous day close, but is also opening above the previous day high. What happens? Market went upwards. Again, the market is opening below the previous day close. What happens? Again crosses the previous day high. So here market is again in decision mode and then came back sharply to that point. If the market would have in negative sentiment, it would have broken this previous day close, but it is not breaking this previous day close. It is supporting. So till this point, you should be very cautious about the market direction. Once you get experience about the market direction, you can take positions on such points. On such points, you can take your positions. But until you does not get markets knowledge about the market's normal course or normal behavior, stay away. And just watch such examples. Watch your chart daily. You got 90% of information in your charts. So chart gives us a lot of information. You have to just work there and study those charts. The information of the trading remains lied in or remained hidden in these charts. So I'm trying to just dig out those hidden things for you, and you have to just consider these two things whenever you are deciding about the market's direction. What you have to do. You have to you have to consider previous day high and previous day closes as important. What happens here? The market takes support. Market takes support where it crossed previous day close. First previous day close was crossed here, and the previous day high was reclaimed. Here previous day highs were reclaimed. It means what market has started reversing, but it does not go straightly upwards. What happens here? Market makes confused and invites normal traders to sell again. Market start to sell again. What happens here? Market start to sell again. Why? Because these buyers, these sellers were smart sellers, but at this point of time, markets has invited retail traders, and they do not understand the market's behavior properly. So, such retracement, such fall give satisfaction to these retail traders, and in such condition, they do not exit. So, and what happens? They take great losses. So you don't have to do that. You have to follow these two things. When the market is above the previous day close and reclaiming previous day highs, you have to be cautious. What happens here? Market is opening at previous day close. What is happening? Market is straightly banned through the previous day high. See, this was the previous day high and this was the previous day high. In the market, after retesting of this point of the reversal, market just bent straightly. What happens here? Market is opening above the previous day close, and what is happening? Market is bent straightly above. Again, the market is opening above the previous day close and make a new high. So this is the point which I'm making you understand from this strategy, or I would say a comprehensive view about the direction of the market can be taken out with the help of price action. And in the price action, you can observe only 2 points: previous day highs and previous day closes, right? For taking any decision about the direction, you should always see what has happened previously in the market. Has it crossed any previous day closes or any previous day highs? If it is not so, then it means what market is negative. But it has started to cross previous day closes and it started to reclaim previous day highs, it means market has started to reverse. Now it will go up. So in such situation, when the market is not crossing previous day highs and taking a short support on previous day closes and breaking those previous day closes, you have to take only selling positions. Once the market starts to support previous day closes and reclaim its previous day highs, you have to take long positions. So direction is quite clear. You can see each day why I have activated this session break, because you can see each day is a new day, and in each day is telling us that market is behaving 80% in general conditions, but what happens in 20% conditions, it does so such behavior that all the traders get confused and it runs away from there. They run away from there and take great losses in such posts. So what you have to do, you have to be friend with the chart. You have to be friend about the trend in the market. When the market is selling, by making by just closing previous day closes, by crossing previous day closes, you don't have to buy. And when the market started getting support at previous closes, you have to buy only. You don't have to sell now. So this is the normal thing that I wanted to tell you. For the this is index chart. I have told you the general psychology and price action behavior. Price action behavior, including the two specific point of previous day high and previous day closes. But you don't have to go blindly in the market for markets movement and markets behavior. You can go for another things also. In the later videos, I will tell you the things that can verify your direction, that can give you a confirmation about the direction that you take. Is it really against the trend or with the trend? Is it against the market or is with the market? So that is all for the day. I hope you have understood. Definitely you will get great insight about the market's behavior, and for that you just go if you just go to the previous section. First you go through the illustrations that I have made here, and then you try to find out these things in your chart, and you will get a comprehensive knowledge about the market. So that's it. That is all for the day. I hope you all will do great thing in your in trading career. Best of luck. Thank you very much.